I hope you stopped by to talk about penny stocks, because that's all I'm in the mood to talk about. I'm John Zidar. This is On Top and Hot, and today is February 26th. It's Wednesday. Now, I like to talk about penny stocks because that's what I primarily trade. I'm a day trader constantly looking for stocks under $5 that have heat, that have potential to make us some money. And I've got one I want to share with you. This is Eyenovia Inc., ticker EYEN. Now, I found this stock the way I find most of the stocks I share with you, by going to the charts first. Because we're looking for a stock that's ready to run. You're not going to get that looking at filings and press releases. That's all subjective. A hot chart is not subjective. And I'm primarily looking for a specific bullish pattern, my atypical breakout, which is now being called the 200-day squeeze, which just makes more sense because you've got a 200-day MA at the top falling, you've got a 200 haul on the bottom climbing, and your price is in the middle getting squeezed. And when it gets right on top of the 50, that's normally when it pops and takes off. That's the sort of chart we got. Now all we need is a catalyst. So I go rummaging around through the press releases and the filings, going over the last 30 days. We don't have to have a fresh catalyst on a hot chart. Any catalyst will make it run. And I think we've got that, folks. So, Eyenovia, she is based here in America out of New York. She finished today at $1.76, and she was up about 16.5% today. Now, this is a hot penny stock on the major exchange. She's on the NASDAQ, which comes with benefits compared to those penny stocks on the OTC. First off, there's no transaction fees on the major exchange. You can buy your shares for free. You can sell your shares for free. What a concept. There's also trading pre-market and aftermarket with major exchange stocks, which you never get with OTC. And let me tell you, folks, some of the biggest runners you will ever see happen in those periods of time because there are no halts for volatility. There's also a heck of a lot more money and a lot more volume up on the major exchange, which is vital for us as traders. And there's a lot more rules. Now, they're for the company, but they help us because they keep our investments safe by keeping the companies honest. So what is Eyenovia about? Well, we've got a nice description here, but I'm not going to read that, folks. We're going to dive on over to their website. We are now over here at the company's website. This is eyenovia.com. And what you're seeing there in the video is what this company is all about. They have a device called OptiJet, which delivers microdose medicine directly to the eye. You look into it, there's a little light, you press a button, and puts a mist over your eye just that quick. Now, I think it's pretty practical because I do know a lot of people who have an aversion of dropping any liquids into their eye. It's not that they missed a target. It's just that every time they drop the drop, by reflex, their eye closes. Even when they try not to, it closes, and they end up wasting a lot of medicine. And even when they're successful, honestly, they still have to wipe their face. There was just too much going into their eye. This gives you a metered dose that you never have to worry about. It just sprays across your eye. Whether this be for glaucoma, maybe you do want to moisten your eyes, or you want to wet your lenses, dilate your eyes, whatever it may be. Now let's get a little more information about this product. This is what it looks like. You've got your medicine inside here, and they say that you get 180 metered doses out of this. Now, if you think about it, if you're paying for your medicine for like glaucoma or something, if you're putting it in your eye, you're wasting it 5 times as much as going into your eye than you probably need. So the medicine's going to last you 5 times longer, which means it's going to be a heck of a lot cheaper for you. Now, they have this device already on the market. It is being used by commercial businesses, biopharmaceutical companies that put their drugs into this device. So it comes to the people already packed and ready to go. But they want to take this device and give it to the consumers empty so that we can put in whatever we want, even if it be Visine, whatever it is we want. They say they will have this done by Q3 of this year, and they want to put in the filings with the FDA in Q4. Now, I anticipate it to be approved pretty quickly because there's no drugs, it is a device, and it's already approved over here. They've had to make a few minor changes to it, but I don't think that should stall it. So this should probably be out by the end of the year, and they'll be tapping into a $6 billion market. And I don't know how many other companies are doing this. Now they tell us down here that they are trying to connect this to a mobile app and a cloud. They want to gather information. Well, of course they do. Everybody wants to gather information. Yeah, it's going to have some benefits and uses for us, but they can sell that information and make a lot of money. So of course they want to do that. These are some of the things that they're considering. Remote therapeutic monitoring to make sure you're doing it and doing it right. Set up alerts, ding, 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 just to remind you. And health insights, whatever the heck that is. And whatever else they can think of. And with the onset of AI, God only knows what they can possibly come up with. So let's go take a look at the news and get some more information about what's going on. I have gone back here to December of last year when they did a direct offering for $1.9 million. A direct offering is like a public offering, except they don't sell to the public. They sell to investors who ask for those shares, big whales. Yes, it does add more shares to the outstanding share count, but they didn't have to do it through us. Then we have a piece of news that came out at the beginning of the year. The company engages Chardin as advisor for review of strategic alternatives. Now, this really is the primary catalyst here. We do have a new product that's going to be coming out at the end of the year, but what's that got to do with right now? Right? We're looking for something right now. Now, this is definitely a soft catalyst, so follow along with me. The company concurrently is focused on completing development of their Gen 2 user-filled Optejet device by the third quarter of 2025 while reducing spending by over 60%. That's a big deal. They've cut their expenditures by 60%. The company announced that it has engaged Chardin as its financial advisor in connection with its evaluation of strategic alternatives. With assistance from Chardin, the company will continue to assess a full range of strategic alternatives, including, but not limited to, a business combination, a merger, sale of the company, a reverse merger, asset sale, or a combination of any of these, while also carefully managing its expenses. The company has not set a timetable for the conclusion of this review and has not made any decisions related to any specific strategic alternatives at this time. They also tell us the company does not intend to comment further unless or until its board of directors has approved a definitive course of action. So what we've got here is that things are a bit slow. When we go look at the financials, you're going to see revenues are slow. They've got a product. They have a service, it just isn't kicking into high gear. And they're hoping getting this new product on the market at the end of the year is going to help. But they've got to do something between now and then. So what are they going to do? We don't know. It's very speculative. And that in itself can be a catalyst. They've already told everybody there is going to be a change. Well, when you tell traders there's going to be something going on, there's going to be a change for the better, they like to speculate to the brighter side of things. They give the benefit of the doubt. You'll see a stock start to run for, well, no good reason. You don't have any hardcore reasons, and still it's running. That's the sort of thing we've got here. I do believe it can push the chart. But we do have some more news to consider. We had a reverse stock split back at the end of January. They went from roughly 160 million shares down to 2 million shares. That right there is a catalyst, folks. When the stock gets into a breakout position, people start to look at the stock, look at its fundamentals, see if it has any value. Its value just increased by 80-fold. 80-fold. There are 80 times less shares now than there were. So the stock is now worth 80 times more. So people taking a look at it now may be turned on by that. Like me. That's a low outstanding share count, 2 million. Then they tell us here they are making progress on the user-filled Optejet dispensing device. They also tell us they have made an amendment to a senior secured debt, improving cash runway to allow for the evaluation of strategic alternatives. They need some cash to be able to do something here. So they went to one of their biggest debt holders and they worked out a deal where they have put off any interest payments for 6 months. They have also added an amendment that they can change the debt and convert it into shares. They say they're going to be doing it at $1.68 if they decide to do it, and the price of the stock right now is $1.90. So we're not too excited about that. But they are working on things, trying to make things better. And to prove it, the very last piece of news that came out today. The company is in compliance with all the NASDAQ continued listing requirements. They were under $1. They're over $1 now. A lot of times you'll see news where they say we're back into compliance with the minimum bid price requirement, but they still have other things they're out of compliance with. We are all good here, folks. We are all golden. So let's take a look at the relative volume for the company. Did she get any excitement today? She did. She's been doing like 140,000 shares a day as an average over the last 30 days, which is definitely under the radar on the major exchange. Today, she did jump like 400, 500%, up to 722,000, but we're still under 1 million shares, so we're still under the radar. But she is getting more attention. She is climbing on the charts. Taking a look at the share structure, I already told you what it was, 2 million. That's outstanding. I don't know what the float is. To figure it out, all I need to do is subtract how many shares the insiders own. I don't know that either, but I bet they own something. So subtract that, and we're going to have ourselves a super duper low float. Folks, let's just say it is 2 million, and let's say tomorrow they do 10 million shares. Well, that means every share had to sell 5 times over if the float is at 2 million, which can cause a supply and demand issue. The chart will start going parabolic, looking like it's a short squeeze because there's not enough shares for the people who want them. So that is looking really good. What you also get with a low float is a low market cap. We're down here at 3.1 million. The reason for that is your market cap is determined by the price multiplied times all your shares. That gives us 3.1 million. Financials. This isn't looking all that bright. Now, I'm going to presume this was their ticker all this time. Maybe it was, maybe it wasn't, because this is a big difference in revenues. 4 years ago, we had $2 million on the books. We know that's millions because we've got to add 3 zeros to any of the numbers. 2021 was at 14 million, getting to keep 12 million. Then in 2022, COVID, boom, we're down to zero. Everything's zero. At the end of 2023, we were at $3,000, and it cost us $3,000, and I don't see anything for 2024. Taking a look at our quarterlies, well, we've got some 2024s in here now. We had $4,000 the first quarter, $22,000 the second, and $1,000 the third quarter, which is September. But look, for $22,000, it cost them almost $500,000, folks. Actually, yeah, $500,000. So yeah, they need to do some tweaking here. I'm not looking at this for an investment. I'm not looking at this for a long hold. I'm looking at this for a quick jump off of a hot chart. Taking a look at the balance sheet, cash and cash equivalents, I like to think of it as the bank. We've got about 7 million in the bank. Total assets, we're at about 23 million. Total liabilities is less, 19 million. So though we don't have any real revenues to speak of, and we darn sure don't have any profit, we do have some stockholder equity, almost $4 million. So we're not holding a bag here. And jumping on over to those disclosures. We've got a whole bunch of 8Ks here, and each one correlates to all the news we were looking at. The reverse stock split, being in compliance with the NASDAQ, that secured note being amended. All of that's being taken care of here. So that's what we got going on, folks. We have a soft catalyst because they are considering changes, which means there could be a merger, a reverse merger, an acquisition, but they could sell something. We don't know what's going to happen. And in most cases, when I do see this, when speculation kicks in, it's overwhelming. You can't explain why the stock is running so hard on no information. But that's the sort of situation I think we've got here. Everything looks good to me. It looks primed and ready to go. Even a hint of catalyst can get a stock to move. I'm so eager to go look at that chart. I'm stuttering now. Let's go look at the chart. I had to readjust the camera. I couldn't fit all my beard into it. We're over here at my free trading platform, Thinkorswim. We are taking a look at Eyenovia, ticker EYEN. Got her opened up to a 1-day, 1-year chart so we can get an overall feel for where the chart's been going and get our 52-week high and low if possible. So we've got a 52-week high about a year ago of $205.60. Is that possible? No. Remember I told you it was at the end of January they had a 1-in-80 reverse stock split. And what you would usually see is a big green bar kicking that price up 80 times and then whatever happened afterwards. Well, they don't do that anymore. They absorb that big green bar into the chart by multiplying the entire chart as far back as it goes by the ratio of that split. In this case, it's an 80. So they take every number on the chart and multiply it times 80. So our high here of $205 has to be divided by 80. That gets you closer to $2.50. Ridiculous, isn't it? And it's not a temporary solution. As far as I know, it's going to stay this way forever. I hate it. So the numbers are all screwy. Behind the reverse stock split, in front of it, they're all normal. So we're not going to pay attention to the numbers, but the chart's right. So we were at a high here above the 200, fell underneath it. We did break through again, but there was no way she was going to break out because our 200-day is falling. A breakout over a falling 200 is really rare. She came back down into her fall, went sideways for a while, dropped to a new plateau, went sideways, dropped to a new plateau at the beginning of the year, and right now we're down here at a 52-week low of $1.43, though our current price is up near $1.76. Let's jump on down to our 6-month, 4-hour view. So now we've got a new 6-month high, but we're not going to do the math. As you can see, she came back down under the 200. She tried to get over it here where it was actually going flat, but she couldn't do anything at all, just could not make it work. Fell down here in November, flatlined, broke through the 200, came back down and continued falling to a new low. Now, it was the 4-hour chart that first grabbed my attention, but it is actually the 1-hour chart that looks hot. But this is setting up for that atypical 200 squeeze breakout. You've got your 200-day MA at the top. You got your 200 haul at the bottom. And I have mine change colors from fall to rise, so I know as soon as it's changed direction because the price responds so quickly and so abruptly when the 200 haul changes colors. When this is rising and this is falling and the price is in the center and gets on top of the 50, you're ready for a launch, folks. I see 8 out of 10 of these launch. How far? To and through the 200. Well, we're down here at $1.71. For Pete's sake, folks, that's all the way up there at $4.90. Do I really think it's going to rip that far? I'm not going to say it's impossible. She is already starting to push, right? As soon as this turned blue, the volume came into the picture, she started pushing away to get on top of that 50. It's looking like it wants to go. We have our ADX down here, which tells me that my dominant trend is the uptrend. The green line, when it is on the top, says your uptrend is dominant. If it was the red, your downtrend would be dominant. And then your yellow line tells you how strong the dominant trend is. Well, our dominant trend is an uptrend that is growing stronger. That's the full chart from 0% to 100%. And right now we're up there at 80%. And all of our other oscillators are starting to climb as well. They're all starting to push up. Now let's jump on down to that 1-hour view because that shows a lot more heat. So we're in a downtrend here. You can't trust that bubble. We've actually got to divide that by 80. That's how low it was there. Over here, all the prices are right. We're in a downtrend. We come up here. We are in between, right? We've got a 200 squeeze going here. The 200's falling. The 200 haul is climbing. The price is in the middle. Doesn't mean it's going to happen immediately. It means you need to watch it because it's probably going to happen. So it's getting tighter and tighter. Then we have a huge bar right here, folks. Now this bar tells me this is looking for an opportunity to run. She's down here at home. She shoots up with a solid bar, but does not put the solid bar through the 200. But she does spit this wick out to and through the 200. The higher that wick goes, the better. The very next bar If it does not come down lower than where the first bar started, I consider that a signal that I can trust that this is looking for a breakout. Again, it's not telling me when, it's just saying soon. Watch it. So I would definitely be watching it here. Our 200s are getting closer and closer and closer. There's no doubt about that. We took a dip here. I'm going to call that the crouch before the pounce, like a cat does. You just go down a little bit to jump up way high. We came down to $1.40 here, pushed back up over all of the MAs to and through the 200. We've come back down and settled on our 9-day, which is exactly where she needs to be. She's over top of the 50. Our 20 has just crossed the 200 haul, pushing up. This is a perfect setup for a run right now, folks. We had lots of volume today that was getting stronger at the end of the day, and all of our oscillators have some heat, right? Our PPO, my percentage price oscillator, which is a lot like your MACD. Your MACD uses the whole price. Your percentage price oscillator, yes, David, uses a percentage of the price. My ADX here, this is a little perilous. Everything is down here at 40%. My downtrend is falling. My uptrend is falling. My strength of any of those trends is falling. So right now, it is questioning what it's going to do. In my opinion, it is going to climb. My MACD is above the other line. It is pushing up. So is my PPO. And look at our RSI, folks. The RSI has got a cup going on there, strong. She had a lot of power, fell hard, all the way down here to 55, which is as low as I want to see it go. And right now, she is climbing hard and fast. Let's come on down to our 5-day, 15-minute. There's that big pop. She jumped there from $1.82 to $2.58. That's about 30% gain, coming right back down to home, going sideways and starting to droop in that crouch. Hit this low pre-market today. Went sideways after she came right back up, sitting on that 200. Boy, that drop there and then coming back up immediately would have told me she wants to jump. She's looking for something to push off of, like a pogo stick. Boink, she came up fast. When they come up that fast, folks, are coming up with power to spare that can push it up, right? Boing, a bounce. And that's exactly what she did. Once she got on top of that 50, she launched, folks. She went up over the top of the 200 and climbed all day today. Hitting a high here of $2, started off at $1.40, so you had 60-cent run there. Coming back down, landing perfectly on the 200 with just the wick, right? The solid bar is on the 9 here. The wick came down through the 20, down to the 200. This is another signal to me that it's getting ready to climb. Folks, whenever I see a wick go through a bunch of MAs, but the solid bar stays at home, to me that's like putting a foundation deep in the ground. The more MAs you go through, the deeper you're going, which is like building a skyscraper. You need a deep foundation if you're going to go up. Now it has dipped. It has dipped, but I think she's going to bounce, folks. I would be watching this right now. I think we've got a hyper bounce coming. We haven't got a very strong catalyst. It is a soft catalyst working on speculation. Traders love to speculate. They really build it up in their minds, and they show it and prove it by pushing that price up higher and higher. So put this on your watch list, ticker EYEN. Go ahead and do some more due diligence. That never hurts. But watch for the volume to come into this, folks. Remember, she's got a low float. I don't know what it is, but it's less than 2 million. And if we do over 2 million shares, this thing could start to fly. We didn't even hit 1 million today. Hopefully this is exciting to you, folks. Hopefully you're watching and learning. Hopefully you're doing your own DD afterwards, because I don't cover it all. You know that. Nice having you here, folks. I appreciate your time. Remember, the more you know, the more you're going to grow. See you, folks.